The brakes are being pumped on inflation. Prices are still going up, but not growing as fast as they were before. Take a look. The Bureau of Labor Statistics says overall prices jumped 7.1% in November compared to the previous year. That's down from 7.7% in October and the peak of 9.1% in June. The slowdown mainly caused by a drop in gas prices, but CBS News' money expert says it's still a really good sign.
I think that we're trending in the right direction. 5 consecutive months where we're seeing the pace of inflation decelerating.
But one category continues to rise, that's shelter, which includes rent prices.
The fact that shelter went up is not a great sign, but economists do expect that that rate will drift down.
We all want to know, when will prices get back to normal? CBS News' Nora O'Donnell asked Treasury Secretary Janet Yellen. She's basically the chief financial officer of America.
What is 2023 going to look like for the average consumer?
So I believe inflation will be lower. I am very hopeful that the labor market will remain quite healthy so that people can feel good about their finances and their personal economic situation.
I mean, it's been decades since the American consumer has had to deal with inflation like this.
Yes, and I hope that it will be short-lived. We learned a lot of lessons from the high inflation we experienced in the 1970s, and we're all aware that it's critically important that inflation be brought under control and not become endemic to our economy, and we're making sure that that won't happen.
Secretary Yellen told us she sees positive signs on the horizon that many of the underlying causes are slowly being resolved.
First of all, shipping costs have come down, delivery lags, which were very long, those have shortened.
Gas prices down.
Gas prices are way down. I think we'll see a substantial reduction in inflation in the year ahead.
It's going to take a year.
Well, I believe by the end of next year, you will see much lower inflation if there's not an unanticipated shock.
But for families who are paying more at the grocery store, when 2023 comes around, do they need to be worried about a recession?
There are always risks of a recession. The economy remains prone to shocks. But look, we have a very healthy banking system. We have very healthy business and household sector.
You have said this. You do not believe there will be a recession next year.
There's a risk of a recession, but it certainly isn't, in my view, something that is necessary to bring inflation down.
Let's hope we can avoid that. To help control inflation, the Federal Reserve is expected to raise interest rates yet again tomorrow. Let's verify what that means for your wallet. Let's verify, what are the 3 biggest ways interest rates affect Americans? Our sources are 2 economic advisors, Bill Hagelin from the Bipartisan Policy Center and Peter Riccio from Tulane University. Okay, to start, let's explain what the interest rate is that's going up.
Rate at which the Federal Reserve loans the money to its member banks.
The interest rate on your loans uses it as a baseline. So when it goes up, all new loans go up. You'll see it in 3 big ways.
If they went on a loan to get a car, or they went on got a mortgage.
Second, credit card debt can go up.
Absolutely. Now is the time to pay it off if you can do it.
And third,
There's certain kind of stocks that get clobbered when interest rates go up, and certain ones don't. And the ones that get clobbered are growth stock.
a growth stock is basically any stock that significantly outperforms others in their sector. For example, Amazon or PayPal.